In our financial maths topic, we're up to the section of buying and selling shares, so let's work through that. So shares, you may or may not know much about them. Let me give you a bit of a summary here. Large companies, they sell shares to the public in order to raise money for themselves. So they're not like a tangible thing, so to speak, but it's a way of being involved in a company, and it's a type of investment that you can do. When you buy shares in a company, you're then called the shareholder, and you receive some money when the company has their profits once or twice a year, and they're called dividends. The share prices can move up and down daily. You may have heard of the stock exchange and those sorts of things, and that determines share prices. But over the longer term, the price of shares usually increases gradually. So imagining you bought some shares, let's say they were $10 each when you first bought them. Because the price of the shares will increase over time, if you then go and sell the share in the future when it's at a higher price, then you're making a profit from what you originally bought them from. When you buy or sell shares, that's called a transaction, and that has to be performed by a broker. That ASX stands for the Australian Stock Exchange Broker, so somebody to help do that transaction, so to speak. So there's a cost involved there, their broker fee, and it's usually a percentage charge of the number of shares that you buy, or sometimes it's a flat rate, so it might be $150. Within that, there's also GST, goods and services tax, and that's 10% just on the brokerage fee, not on your shares. So let's work through some examples. So here's one we'll sort of do together. Just the formula for how it's done. The total cost that you're going to have to spend when you buy some shares is the value of the shares bought. So let's say there were $10 per share and you bought 10, then there's $100. That's also called the consideration, just some of the language that we use there. There's the brokerage fee to pay and the GST for the brokerage fee. So noticing that they are added on to the total cost. Let's do an example. So if you were to purchase 2,500 BHP shares at a value of $65.78 per share through a broker, and they charge you a 2% fee, what's the total cost for that individual transaction to buy those shares? The consideration then is, this is the number of shares, 2,500. We multiply that by the cost of each share and we get this amount of money. Whew, huge amount of money there. Who's got that much? It's just an example. What's the brokerage fee that we're going to add on? Noticing the plus. It's 2% of the consideration. Remembering that of is a multiply. 2% as a decimal. Remember, we divide that by 100 to get to the decimal number. So it's 0.02 of the consideration number. So this is the brokerage fee here, $3,289, and 10% of that brokerage fee, 10% of the $3,289. Remember, 10% as a decimal, 0.10, and here's the extra amount. So adding all three of those up, this is the total amount that we have to pay. The consideration, so cons short for consideration, plus the brokerage fee, plus the GST just on the brokerage. All right, doing one together here. If we're asked to calculate the cost of buying 500 Qantas shares at $4.80 each with a brokerage of a $30 flat fee. So I wanted to do this example because sometimes it's a flat fee for the brokerage, not a percentage of. So now you will have seen one of each type. How do you set this out? Explain what you're doing at each step. The first step is the consideration. So writing that word, consideration, that's the number of shares multiplied by how much they cost each, $4.80, and that comes out to be 2,400. You can put a dollar symbol here each time round, or just leave that till the end. We're going to add on the brokerage fee, and this time round it was a flat rate, or a flat fee, perhaps I should say, as it says in the question, of $30. So we'll write a 30 there. And then the last part is adding on GST of 10% of the $30. And how do we work that out? 0.10 multiplied by 30, which is $3. And therefore the total amount, adding up all three, it's good practice to show what it is that you're adding up, so that if you do make a mistake, you can go back and find it more easily by seeing trying to understand what you did in your head or what you typed into your calculator. So that's how we do that one. There's some questions to do. Next, we'll do selling shares.